Bitcoin has seen some more volatility in the last couple of days. In today's video, we're going to be taking a look at the technical analysis on BTC, sharing my thoughts and opinions on the short, medium, and longer term views for Bitcoin. We'll take a look at where there potentially are some worrying signs and whether or not we have some trading opportunities. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe, and let's take a look at what's going on here with BTC. So this is Bitcoin paired up with USDT. We're on the 1 hour Binance chart here. And yeah, we are recording this at 0400 UTC, so it's quite early in the day here. So, it's seen an interesting kind of turn in the market last night. For Bitcoin, we did obviously pull back here, coming in by a 1.15. Obviously, we've kind of been dancing around the 50 simple day, 50 hourly EMA, so the SMA even, the yellow line that's coming through the chart. We've been kind of dancing around this, also trying to find support on the 50 EMA, which is the blue line coming through the chart. Now, the worrying thing here is if we do lose the EMA, then of course we're going to be looking for these tumbles to the downside. The other thing that I'm kind of concerned about here for Bitcoin is the overlapping nature of candlesticks that we see going on. Essentially, we are on no trend to the upside, although there is of course that misconception that we're in higher highs and of course higher lows here. This unfortunate pattern has a habit of wanting to go in the opposite direction. So we're not looking for big breaks to the upside. We will be looking for bigger breaks to the downside. This is known as a continuation pattern. Okay, it tilts up like this, with overlapping candlesticks, higher highs, higher lows, and it's a continuation of what led into it. So we move down, we continue going in this particular direction here with the overlapping nature, and then we move on down from here. Okay, so if we take a look at that from like an Elliott wave theory, which is a wave theory, is a three-wave pattern. It's quite simple to see when you start actually analyzing it through the charts like so. Now, with this, doesn't necessarily mean it's bearish right away, because we are finding support on that 50 EMA, and we might actually see another run to the upside before we get into those bearish movements. Now, we do not expect to break our current swing high of 64,133.32. Okay, so that there should hold, but we can obviously be testing out some of these slightly higher ranges here, specifically this range that we saw of previous resistance. And I'm going to go ahead and draw that in a little bit wider so we can have a little bit of an idea as to kind of what sits there. And that would be $63,709 to $64,033, right? Do I think we're going to go that high? Probably not. But again, we are looking for some interesting moves to occur here for BTC. So I might actually draw a parallel channel in here, might make it a little bit easier to see. So if I can find it, it's in here. Let's go ahead and grab a parallel channel and I'll just connect these points together and bring that down, and we'll just pull that across like so. Okay, so there you go. Finding resistance on the 50 simple moving average, finding support on the 50 EMA. Okay, so as it sits today, this is quite a worrying place for BTC to be, because it can go in either direction very rapidly. Okay, it can kind of have those fake areas of kind of breakdown and fake areas of pull up or breakout, and we want to be a little bit aware. Major resistance does sit higher in my opinion. We are testing the mid-level of our parallel channel, but also we are testing out the 50 simple day moving 50 simple hourly EMA, if I can get my words out today. Our momentum indicator is indicating that we are looking for an upward move, not only on the 1 hour, but also on the 4 hour time frame. Okay, so we do have momentum available, although it still looks bearish on the 4 hour time frame. We have had a positive cross here on the 1 hour time frame. If we take that off and bring on the relative strength index, we are fighting the mid-level of 50. So 50 on the relative strength index is your kind of trend filter. If you're higher than 50, you're bullish. If you're lower than 50, you're bearish. And right now it's kind of dancing around the idea of either getting a break out of that level or a break down from that level. Not really that inclusive. No divergences seen with the relative strength index versus price action either. If we go ahead and actually turn that off and bring in our volume profiles, volumes are quite interesting here. During this move to the upside, they've really come down to non-existent, right? And we can see that right inside here. So not giving us the idea that we are looking for bigger moves to the upside here. In my opinion, it doesn't look like there's a huge appetite for anything right now. I think the market's just kind of waiting to try to figure out what's going on. So as I look at this, I do suspect that we might see a bit more of a push to the upside on the next kind of few hours, i.e. Sunday. But we will be looking for breaks to the downside in a kind of bigger macro piece. So what's the trading opportunity? Well, I don't think there's a huge opportunity to go long. I don't think that's necessarily the right way to kind of go. But if we do see a bit of a push to this higher range and our momentum starts to want to shift in the opposite direction, we're going to be looking for short positions. We're going to be looking for those short positions with tight stop loss higher than the previous swing high, and we'll target out, at least 1.5 on the risk reward ratio, which would put us somewhere in approximately here. So hypothetically, under this idea, we would have an entry at around $63,604, stop loss at $64,205, take profit around $62,706, hypothetically. Okay, but obviously it's too early to know exactly where that goes. But that would be the approach here on the 1 hour time frame. There is, of course, still this idea maybe a run up higher into those upper areas of resistance. I just don't think that's likely to be the case, and I do look at this more through a bearish lens at this point in time. And speaking of trading, we've got some fantastic offers and exclusive bonuses for the cheeky crypto community, courtesy of the Blowfin exchange. As you can kind of see here, the whale campaign 2.0 is now in full swing. So on top of the usual kind of benefits that you get of getting up to $10,000 of deposit and trade rewards, depending on how much you deposit and obviously trade on the platform, they're also now giving you the opportunity to get your hands on a Model 3. There are several different prizes up for grabs from Blowfin just for signing up using the link in the description down below and trading and basically depositing and trading on the platform. It's quite straightforward. So if you're a trader, this is a fantastic opportunity not to be missed out on. As you can kind of see here, we have the Apple Watch SE. This is for trading volume above 3 million, which sounds a lot more or sounds a lot more difficult than it actually is. The volume is taker volume, which is only considered. The rewards will be sent within 2 days after the end of the event. Prizes will be distributed in equivalent USDT after the event ends. Each user can only get the reward once based on the highest trading volume during the activity period. 10% cashback, the amount transferred into the futures account minus the amount transferred out of the futures account, obviously 10% of that. And you have the bonuses as well on there. So some fantastic things. As you can kind of see here, as we go up to 15 million in trading volume, you get the Herman Miller chair. You then obviously get a camera here, the Canon EOS R5 at 25 million volume. 50 million will get you a travel fund of $5,000. If you're into your bikes, a Kawasaki Ninja 650. This is for a trading volume above 100 million, and of course the Tesla Model 3 with 300 million in trading volume. So this is a fantastic opportunity to take advantage of everything that this has to offer. So this runs until October the 4th. Why don't you go ahead and check the link in the description down below and sign up to Blowfin and start actively trading and start bagging yourself some of these fantastic deals. So throwing on our smart money concepts, what do we see? Well, we can see here that we have a weak high, so we are in a bullish structure on the 1 hour time frame, but equilibrium does sit down a little bit lower along with some fair value gaps. So it can obviously see a bit of a turn in the market and still remain bullish. So we'll keep an eye on the smart money concepts here on the smaller time frames, but the bigger plays are on the larger time frames when it comes to smart money concepts. So we'll try to take a look at that in a second. So overall, on the 1 hour time frame, I do think that there's not really a huge opportunity for long, but better opportunity for shorts. And of course, I'll be trading on BitGet Blowfin for those kind of opportunities. Let's go ahead and take a look at the daily time frame here. And here on the daily time frame, we can see that we still have the idea of pushing up a little bit higher. Okay, it may have finished a little bit early. It may not have done. Now, at the moment, as it sits and as we start to see rejection here, it is a lower high on the daily time frame. I've spoken about this before. For us to really go ahead and get a true breakout situation, we have to be above $70,000. The reason for that is it's a part of a bigger macro higher high situation. There is, of course, the swing high that we had on August 25th coming in at $65,000. A move above that isn't necessarily going to kind of break us out of our bearish structure, as you can kind of see here, but it would kind of give the bulls a little bit more confidence. And unfortunately, I think that would actually be a big trap for BTC. So on our daily time frame, getting rejected from where we are right now actually would be really neat in the way that we would see consistent lower highs on the daily time frame. We are, of course, above the 50 EMA, the 50 SMA, the 200 EMA. So on the daily time frame, it looks strong, but the corrective nature of what we're seeing in terms of the price action tells me that actually we're probably going to still be looking for these moves to the downside. We are, of course, still talking about $40,000 to $44,000. That hasn't changed. Our momentum indicator is indicating that we are heavily overbought on the 1 hour time frame, indicating that we are likely to in fact see this downward turn in the market. Last time that we were this high on the relative strength index, or the stochastic relative strength index, was the 25th of August. The time before that was up here on the 21st of July. Now, if I come back into the price chart, we can obviously reflect on what that meant. It meant that we had a swing high at $65,000 and we dropped to $49,000. The time before that, we saw a swing high coming in on the 29th of July at $70,000, but we were overbought a little bit earlier time. We saw some divergences going on, so we were actually overbought on the 21st. We had that little push to the upside for 70, and then a big drop down to $49,000. Sorry, it was $49,000 on the 5th of August, and the 25th of August we dropped down to the low range of 52,550. So apologies, I got that one wrong. So as you can kind of see, every time we've kind of come up into these really high ranges of overbought, we've seen big major moves to the downside. The same again on the 2nd of July. The same after that, of course, was on the 6th of June, and we saw a big move to the downside then as well. Now, obviously, the stochastic RSI is not an indication of price movement. It doesn't tell you how many percentage points you're likely to drop, but it does tell us that there's a high probability that we're going to see a shift in the market. Essentially, we're just looking for an excuse for retail investors and traders typically to want to sell their positions, and they'll be looking for a reason. They'll be looking for an excuse, because what this tells us psychology-wise is that people are feeling that now's a good time to maybe start thinking about taking profits. They just need a reason to do so. Okay, so that's what is going on here. It shows us that there's not a huge appetite for continued buying, hence we're overbought, and basically exhausting out the buyers, which means sellers are going to start taking control of the market. Okay, so that's where we sit with Bitcoin on the daily time frame, and it does look more aggressively to these moves to the downside. As much as people don't want to admit it, that's ultimately what we're seeing in the charts and why we've been talking about it for such a long time. Now, in terms of our smart money concepts, we're in a bearish structure. That has not changed, and that means that we have a strong high, weak low. Okay, so that means that the high that we have up here on the previous swing high of the 8th of June is our strong swing high, not likely to get broken. And the move that we had to the downside on the 5th of August at $49,000 is a weak low, indicating that that can in fact be lost. Okay, so smart money concepts tells us that our structure is incredibly bearish on this daily time frame. Now, it's not obviously very accurate in the sense of it's not predictive. It only shows you what's currently already happened. So we want to be very aware that all indicators only show you what's happened, not what's going to happen. Your assumptions here have to be that we have to try to understand the psychology of the people who are buying and selling as to how they're going to react to the data of the indicator. So here the structures are bearish because we have lower lows and lower highs on the daily time frame. We have closed positions lower than the previous swing lows, and that's ultimately why we have this bearish structure on BTC. That's essentially what it's telling us. Now, it's not taken into consideration any of the potential fundamental breakout news and all that kind of stuff. But what it is telling us is that we haven't had a closed position higher than a previous swing high to turn the structure bullish. So it remains bearish. And as such, we have a strong high that's not likely to get broken, and we have a weak low that is likely to get broken. Therefore, it kind of confirms our bias against a bit of a bearish move for BTC, in line with Elliott Wave theory, predicting out $40,000 to $44,000. Now, I would love to be wrong about this. Okay, it's possible that maybe I've got my wave counts all wrong. Possible, but I don't think that's necessarily the right thing to kind of be thinking. I mean, if I take this one off, for example, we can really kind of break down all of these kind of structures that we see going on inside the price action here, and we can kind of try to make out whether or not this is going to be, some kind of bigger issue in the market, right? And for the most part, I don't suspect that that is exactly what's going on. But, I think we can see within the price action that this is a very corrective pattern. It's a structure that is basically telling us that we have a big breakout in the future coming. It's just not looking to happen right away. And that's not bad. It's just that we need to be more patient in the market. Don't expect instantaneous moves to the upside. We already know that the market is illiquid. We already know this from various different factors. We've talked about credit card debt on the rise. We talk about the $5 billion of delinquencies when it comes to credit card repayments that the banks are basically letting go. We can already see the US debt is on the rise. We know that there's a huge liquidity-based issue, and obviously they need to do more printing, which you kind of have started to see. Okay, over the last few months, we've seen M2 money supply increasing, and we've obviously had the Federal Reserve pivot. All these are crucial parts, but we still see unemployment being a key issue at the moment in the US as well. So for the most part, liquidity is an issue, and until liquidity increases, we're not going to see big breakouts in the market, in my opinion. Now, don't get me wrong, institutions, they've got billions of dollars on the side. They could potentially start to increase their liquidity in the market, but I think essentially they're going to be buying up the fear that's out there first. So I do suspect $40,000 to $44,000, and I do think that that's going to be hopefully the key area for support before we get into those bigger runs to the upside. But let's talk about the weekly close. What's the bulls looking for and what are the bears looking for in here? So the bulls are going to potentially try for a close position above 65,000. I don't think they're going to do that, but if they can rally today, a close above $65,000 would put the bulls in a little bit more control than the bears. You can see here that we are in a bullish structure on the weekly time frame, so we're not overly concerned about the price action, right, on a bigger macro scale. We're in bullish times. We're above the 50 EMA, the 50 SMA as it stands today. Equilibrium is right down, of course, on the low range of our expectations of $40,000 to $44,000. We have a weak high, strong low being massively down in the price chart. So we are looking for a bit of a move lower than a 50 EMA, 50 SMA on the weekly time frame. And we are, of course, looking for those bigger breaks to the upside in the longer term. The bulls, I think, are going to hopefully want to rally for the 65K. And close position up there would be good. And the bears are going to want to basically keep the price lower than $65,000 on this weekly candle. So if they can do that, then of course we are still in lower highs, lower lows on the weekly time frame. The 200 EMA here sits at $37,000, so it's looking pretty tidy. A retest of that could be really bullish in the longer term. But we want to also reflect on a few other things, such as the Gaussian channel. The Gaussian channel here, historically, when you close inside it on the weekly time frame, does lead us into more bearish markets. There's a couple of exceptions of black swans where you've closed inside it briefly and then rallied, but ultimately retesting the upper trend line of the Gaussian channel has actually more often than not been a real bullish time for Bitcoin. So we want to keep a close eye on that. Obviously moving down into that kind of $40,000 to $44,000 would be a pretty big move inside the Gaussian channel. So it could be a kind of freak out situation that we had seen previously. For example, if we come all the way back here into kind of the COVID time, we can see that during the Federal Reserve pivot of 2019, we can see that we did close inside this Gaussian channel, find support on the Gaussian mid-level before we rallied up into the bull market. The pandemic was obviously the unknown black swan event that really did take the market lower than the Gaussian channel, but the Gaussian channel never turned red, and we did in fact rally on up here. So it can be, of course, very different times to what we saw previously, where we'd have these little pushes to the upside, and then of course bearish times on the Gaussian channel. Of course, we have to kind of take it with a pinch of salt. These things are, of course, laggy. They're not telling you what the future is going to hold, only giving you the idea of what's already happened. So all in all, Bitcoin on the weekly time frames at an interesting spot. We are, of course, still targeting out new higher highs overall and good target ranges above $100,000 in the bull market of 2025, in my humble opinion. But that's all it is, just my opinion. What's yours? Let me know in the comments down below, or join us in our free Discord server. We would love to hear from you. And if you haven't done so already, guys, check out the video right up here. It's not one you're going to want to miss.